We had a massive outperformance recently, and I want to discuss the four reasons why we believe we had this outperformance. This is the Not Even Wrong podcast. It's June 10th, 2023. This is Krim Telco. Since the last update, we're up 9%. The market's up 11 basis points. For the year, we're up 106.3%. The market's up 11.9%. We're outperforming by 94.4%. Um, the outperformance has been extreme in the last couple of weeks. That's why we are now up over 100%. It's mainly driven by Tesla and to some extent by Nvidia, our two positions. And I want to talk about the four reasons why that is the case. And two of them are reversals of last year's underperformance. Two of them are new. Let's start with the new ones. Number one, Tesla has struck deals with Ford and GM about the charging infrastructure. And by that on itself is an interesting proposition, certainly a business opportunity. Of course, the signaling effect of that is a lot more important. In other words, Tesla is going to become the standard for North American charging infrastructure and also for API and software integration as far as charging and the car is concerned. Now, for people that are not familiar with electric cars as users, and this is not a very technical statement I'm going to make, it's just simply when you use a car, an electric car, you have two massive, interesting software solutions that need to be in place. Number one, your battery needs to be preconditioned to be able to charge efficiently. And number two, you need to know where to go to charge. And those are two things that Tesla has solved. When you put in a destination, let's say we live in Los Altos and we want to drive to Tahoe, we're going to have a pretty clear route of where to go, how long the charging will take, what the most efficient charging is, what the pricing is, where the wait lines are the best. All of these kinds of things are taken care of by Tesla in their math. And that's something that most other users with other cars and charging infrastructures don't have. So Ford and GM will have access to this infrastructure. So number one. Number two, the charging standard is on itself, meaning the actual plug and the technologies around it and all of that kind of stuff. That is going to be Tesla also, which is, by the way, a lot better than whatever else is out there in the market. The Tesla charging infrastructure is smaller. It is much more handy. It is less bulky and all that kind of stuff. So it's just really, really better. And I think the recent announcements are a testament for Tesla's supremacy. And this is what matters. So that's the first reason. The second reason, which is new, is that the generative AI bonanza, if you will, which we spoke about recently in the Anatomy of Bubbles, where we spoke about the importance of naming a trend. So we spoke about the importance of naming a trend, and then that trend will keep going because investors will have a reference point. And generative AI is such an event. It's going to trigger a massive wave of capex. And Tesla is involved in two ways. One is it's going to be tangentially involved as a tech company, but more importantly, Tesla is actually in the real-time AI, in the real-world AI business, and that is a little bit different than generative AI. But the one application where we believe that generative AI will spill over is in foundation models. Foundation models for robotics. I just listened to a podcast today by Peter Beal and Rocky Duan, I think, or something like that, Rocky something, one of his collaborators at Covariant. The podcast wasn't very good, to be honest. A lot of speak, not much saying, but nevertheless, I think what's coming across in the robotics community is that there is a potential for applications of foundation models along the lines of transformers for robotics. I've spoken about this in the past also, that Tesla could become the pioneer in large video models as an analogy to large language models. The idea is really to find relationships between tokens, not just textual, but also real world tokens, It will take a little bit more time, a little bit more innovation in architecture and algorithms, and particularly compute, because that's, of course, a lot more intense. But fundamentally, there's no reason why this shouldn't be the case. And we believe Tesla could be a big, big winner in this game because they have the data. That's very simple. They have the access to massive, massive amounts of data, and they could re-architect Dojo, for example, to train foundation models for video transformers. So there we see lots of potential. We haven't heard anybody talk about this in the markets yet, so there's no concrete mention of this potential. But of course, the markets are always better at pricing things than individuals. So in other words, we believe that it could happen that sooner or later this will transpire and that we will see either Tesla or other companies make advancements in those areas and then translate into better robotics, self-drive technology, and also humanoid robotics. So these are the two reasons why we believe we have a rally in the stock that is new. The two reversed factors. One is simply that Musk now has a CEO for Tesla. The lady that has taken over, I think this week actually, is in place. So Musk is now not the CEO of Tesla, of Twitter anymore. Did I say Tesla? Of course, it's Twitter. And that, of course, has huge implications for the availability of Elon Musk. And it has been a negative factor. As much as you wanted to chastise Musk for being at Twitter and as all the other reasons why maybe that's a good thing or a bad thing and all these conversations, in the end, all these conversations all culminated in one simple fact, which is when Musk took over Twitter, the Tesla stock collapsed, and when he announced that somebody else will be CEO of Twitter, the stock recovered. And this is how the market works. You can argue about this, you can say it's stupid, you can say whatever you want. This is how it is. It is almost like gravity. It is a ball goes down and then comes back up if you give it enough energy. It is like that. So the fourth reason, the reversal, is in China. China's macroeconomy is recovering. It's not fully in the data yet. I think you don't hear the narrative as pronounced as we believe it is. And, as the market works, so it also anticipates these things way before they actually happen. But we had some indication, first the Tesla sales or generally the electric car sales in China are recovering at a quite fast clip, actually, which is very encouraging. And then also we had things like, for example, LNG prices in China spiking last week, so which is typically a sign of recovery. So with that, I think that is, of course, a very important factor in the whole Tesla picture, because again, this was something that was weighing on the stock and on the sales figures and on the actual performance of the company last year. So this wasn't just some narrative or some cosmetic that made the situation not look as good. I mean, this was a real problem, and the problem is being reversed, which is, of course, a good reason for the stock to recover. So we have the four reasons to summarize. Two new reasons. One is the investment cycle, which was triggered by generative AI and the anatomy of a new cycle or a new bubble, if you will, that is going to be created through generative AI and the potential for foundation models in robotics, which could affect Tesla directly. Then we have the deals that Tesla struck with Ford and GM, which are a lot more than just sort of deals in terms of, okay, there's a bit more revenue and this and that. It's a signal to the market that Tesla is going to, be a monopolist in electric luxury cars and, by the way, in transportation in general in the coming decade. And the two reversed reasons, meaning reasons that were weighing the stock down on the stock, yes, last year, and now are reversing back up. One is that we have a CEO for Twitter in place, which frees time for Elon Musk and also puts away that overhang, because who knew where this could end up and how much more Tesla stock he has to sell and all that stuff. So that is stabilizing. And then we have also the recovery in China. I just want to re-emphasize the importance of the stabilization of Twitter. And this is a very important little detail in the financial markets. That is, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So when you are exposed to um, to situations like, for example, we were last year, we had a drawdown of 72%. It is incredibly important to understand that you can't control what's going on. But what you can do is you can have your own sort of goalposts and your own narrative, or if you will, your own map of how to navigate this extreme volatility and come out on the other side in a better situation. This is what Elon Musk did with Twitter. Like you can have an impact on a situation even if it's extremely volatile, even if it's extremely difficult to deal with at the moment. And maybe at the moment it looks like there's no hope and this and that. But if you stick to your guns, if you keep doing the right things, you will end up better on the other side. And this is what Musk did with Twitter. This is what happened to our portfolio. I like the analogy of taking a hike in the Rocky Mountains. Okay, when you take a hike in the Rocky Mountains, you certainly don't have an understanding of the actual true physics, of the natural true physics that you're exposed to. In other words, you could have a landslide or an earthquake, or a bear could attack you. Lots of things can happen to you. And you might have a narrative or something like a map and an understanding of the situation that might not be sufficient to understand every little detail. However, it's enough for you to be able to navigate and get home healthy, or find the shelter. Like you know where you can find food, you know where you can find shelter, you know what the trail looks like, you have maybe a weapon to protect yourself against wildlife. So you have enough understanding and knowledge of the situation to sustain yourself within the realm of your understanding. And this is exactly how the markets work. So again, you might not know every single detail about the reality that you're exposed to, but you have enough understanding to be able to navigate the situation. And this is the way we felt about last year about the market. This is the way we feel about this year. And this is why it's so important also to recognize downturns and recoveries and the situations that we've been exposed to in the last couple of months. So we are recovering because we have, the AI investment cycle is on our side. We have Tesla winning in the marketplace. We have a reversal of the Chinese macro drawdown, which is now recovering, and we have also the liberation of Elon Musk from the Twitter hangover, which has been a real hangover, as we saw, and now is reversing thanks to Musk instantiating a new CEO for Twitter. Thank you.